probably surprised a lot of people that despite the price rise, the Chinese are continuing to buy. So are other central banks. So what's all this about? Well, the answer is quite simple. And that is, it's not gold going up, it's paper currencies going down. And this is very, very important. It's very important to get this message early because when the general public finally realizes that it's not the price of eggs or the price of coffee or whatever going up, but actually the purchasing power of their currency going down, then the currency is doomed.
Good evening, and welcome to the Economy Express channel, your trusted source for breaking financial insights and the latest market trends. Tonight, we delve into a topic that has the potential to reshape how we view money, investments, and the very foundation of our financial system. Renowned economist Alasdair Macleod has issued a compelling warning about fiat currencies, gold, silver, and the turbulent road ahead for 2025.
And when the general public wakes up to it, I can tell you, the dollar, sterling, euro, yen will all be a lot lower. Now, I put it that way, rather than saying gold is going to be a lot higher. Because if you think as an investor, you look at gold and you think gold's gone up. As we talk, I don't know what it'll be when this is released, but as we talk, it's had a good day. I see it's up $18. It's currently trading at 2,712, challenging the levels we saw, 4 weeks ago. If it breaks that, then it's going to go and hit new highs and so on. But do we really want to pay this much for gold? Perhaps we should hang on and wait for a decent shakeout. It's gone too far. But the point they miss is it's not gold going up. It's the currencies going down. Now, obviously, nothing goes down in a straight line or in an even tempo. But I think if you understand that, then you understand that really what your strategy should be is not trading it, but actually accumulating it and accumulating the physical, not paper. Now, this is a very, very important point. And of course, the whole of the investment industry has a difficulty here because gold is not a regulated investment. So how do you get it past your compliance officer? Well, the answer is you go out and buy ETFs. But your problem with the ETF is you don't own the gold. And worse than that, not only do you not own the gold, you don't actually own the shares in the ETFs unless you have specifically decided to take delivery of certificates. Now, this is a very important point because the owner of, the owner of the certificates, in effect, is, the clearinghouse, the intermediary, the big boys in the middle, basically, who guarantee settlement, Euroclear, whatever. And why have they got it? Well, the answer is quite simple. You've got a huge, great derivative mountain, which is absolutely enormous. And the fear is that at some stage we get a crisis and that could be jeopardized. So what they want is your stock to have as collateral to deliver in order to ensure that whole mountain of deliveries of derivatives doesn't collapse. So, ETFs don't get you out of it.
Let's break it all down and discover why owning just 1 kilo of silver could be a game changer for your financial future. Let's start with a fundamental misconception circulating in the financial world. Many believe that the recent rise in gold prices reflects an increase in its intrinsic value.
I'm afraid, is you've got to accumulate coin and bars, both gold and silver. Silver I regard as gold on steroids because, the gold-silver ratio is just crazy. At 85 or something as we speak. This is nonsensical. I don't see it going back down to the sort of 15, 16, if you like, when when silver was treated or valued as money. I don't think we're going to get there. But these levels on the ratio are just absolutely crazy. And as gold goes up, silver will go up twice as fast to bring that ratio down to something which is, if you like, more sensible. So I think, 2024 was interesting. 2025 is going to get even more interesting, I think. I would see these currencies, the fiat currencies, going down in 2025. at least as much as they've gone down in terms of their purchasing power, measured against real money, which is gold. And there are other problems in the background. And I think one thing that could really drive this very, very hard is the debt mountains that governments have. I think the psychology of it in the West, we are so far behind. We really are. And if you look at the mining sector too, there are mines which are so incredibly cheap. If you have half an understanding of the potential for the relationship between fiat currencies and gold, and of course the institutions will switch quite rapidly out of the sort of tech stocks and all the rest of it when that bubble goes. And they'll be, walking into trying to find mines. And, how many analysts do they have now? I mean, there are very few actually, good analysts. I mean, brokers haven't invested in analyzing and covering the mining sector. It's a dirty business and all the rest of it. And anyway, it's been dead for Christ knows how long. Why chuck good money after bad has been the approach. I can see that there's going to be some very, very big shifts, if you like, in the entire investment scene in 2025. It's very interesting times, I think. Very interesting. I mean, interesting in the sense that, we'll be watching, it's rather like a public execution. You'll be watching people dangling on an end of a rope, sort of speculating how long they're going to be twitching. Sort of thinking, hold on, this could happen to me. There's a sort of, that sort of feeling, watching these developments, for those of us who have, if you like, an understanding of the relationship between money and credit, this is actually a very, very serious junction.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Macleod, however, challenges this narrative. He explains that what we're seeing isn't gold going up. It's fiat currencies like the dollar, euro, yen, and pound sterling going down. Their purchasing power is eroding faster than ever. This erosion, often misinterpreted as price inflation, is the true crisis. Imagine this. When prices of coffee, eggs, or gasoline appear to climb, it's not necessarily because these goods are becoming more valuable. Instead, it's our money losing its strength to buy them. Macleod emphasizes that when the general public finally grasps this reality, the collapse of confidence in fiat currencies will be swift and irreversible. And the consequences? Devastating for those unprepared. This brings us to gold, often hailed as the ultimate hedge against economic uncertainty. For over 5,000 years, gold has stood the test of time as a reliable store of value. Today, its role as a financial safe haven is more relevant than ever. Recently, gold prices have challenged significant highs, trading around $2,712 per ounce. Yet, Macleod warns investors not to focus on the nominal price of gold, but on its enduring ability to preserve purchasing power. Here's the critical distinction. Physical gold is the real deal. Many investors turn to gold ETFs for convenience, but these are merely paper claims with layers of counterparty risk. Macleod cautions that in times of financial disruption, such as a crisis in the derivatives market, these paper assets may become worthless. Owning physical gold, coins or bars, provides true security, free from the vulnerabilities of the paper-based financial system. While gold takes center stage in many conversations, Macleod shines a spotlight on an often overlooked asset, silver. He calls it gold on steroids, and for good reason. The current gold-to-silver ratio, sitting at an astonishing 85-1, is historically high and, frankly, nonsensical. Historically, during times when both gold and silver were treated as money, this ratio hovered closer to 15-1. As gold prices rise, silver typically outpaces those gains, delivering even greater returns to savvy investors. The industrial demand for silver is another compelling factor. From electronics and solar panels to medical equipment, silver is a critical component of modern technology. With the global push for renewable energy accelerating, the demand for silver is expected to soar in the coming years. Macleod predicts that 2025 could be a pivotal year for silver, offering outsized gains for investors who act early. But why is 2025 shaping up to be such a critical year? Macleod points to the growing pressure on fiat currencies. Central banks, especially in Western economies, are facing mounting challenges. Years of unprecedented money printing to finance government deficits have created a vicious cycle of inflation and debt. In the United States alone, federal debt has ballooned to over $36 trillion, with interest payments consuming an ever-increasing share of the budget. As inflation continues to erode purchasing power, central banks are left with limited options. Cutting interest rates further devalues their currencies, while raising rates exacerbates debt servicing costs. Macleod warns that this delicate balancing act is unsustainable. The stage is set for a currency crisis that could rival or even exceed previous financial collapses. Amid this backdrop, central banks in Asia and the Middle East are taking strategic steps to protect themselves. Countries like China, Russia, and India are aggressively accumulating gold, aiming to reduce their reliance on the US dollar. This quiet but determined move toward de-dollarization underscores the strategic importance of gold as a tool for financial sovereignty. And yet, there's another golden opportunity, quite literally, waiting to be seized. The mining sector, often overlooked by institutional investors, is ripe for growth. Precious metals mining companies are currently undervalued, creating a window of opportunity for individual investors. Macleod explains that as demand for gold and silver rises, mining stocks are likely to see substantial appreciation. However, the lack of experienced analysts in this sector means institutions will struggle to identify quality assets, giving retail investors an advantage. Finally, let's not overlook the geopolitical forces at play. From the weaponization of the US dollar through sanctions to shifting global alliances like BRICS, the world is becoming increasingly unstable. Gold and silver offer nations and investors a way to bypass the dollar-dominated financial system. As these metals take on a more prominent role in international trade, their value and strategic importance will only grow. So, what does all this mean for you, the investor? Here's Macleod's advice. 1. Accumulate physical gold and silver. Focus on coins and bars to avoid the risks associated with paper substitutes like ETFs. 2. Diversify into silver. Given its current undervaluation, silver offers significant upside potential, especially in a bull market for precious metals. 3. Explore opportunities in the mining sector. Identify undervalued companies with strong fundamentals and low production costs. 4. Adopt a long-term perspective. Precious metals are not about quick profits, they are about preserving wealth in uncertain times. In conclusion, as we approach 2025, the cracks in the foundation of fiat currencies are becoming impossible to ignore. Gold and silver are no longer relics of the past, they are lifelines for the future. The decisions you make today could determine your financial security in the years to come. Stay informed, stay prepared, and remember, in times of uncertainty, knowledge is your greatest asset. Thank you for joining us tonight on the Economy Express channel. Don't forget to subscribe for more insights and updates on the forces shaping our financial world. We'll see you next time.
Good evening, and welcome to your extended economic update. As we approach the end of the year, the global economy is grappling with a complex set of challenges and opportunities driven by inflationary pressures, central bank policies, and shifting geopolitical alliances. Central banks remain at the heart of economic discussions, as their efforts to curb inflation through interest rate hikes have yielded mixed results. While inflation has shown signs of easing in some regions, it remains stubbornly high in others, leaving policymakers walking a tightrope between price stability and economic growth. The Federal Reserve, for instance, is signaling a cautious approach moving into 2025, with hints that rate cuts may be on the horizon to prevent a deeper economic slowdown. Similarly, the European Central Bank and other major institutions are wrestling with similar dilemmas, trying to stabilize economies without triggering recessions. For investors, this presents both risk and opportunity, as uncertainty around monetary policy continues to create market volatility. Turning to commodities, gold and silver are regaining prominence as safe haven assets, particularly amid growing concerns about fiat currency devaluation. Gold's recent performance reflects its enduring appeal as a store of value, while silver is emerging as a dual-purpose investment. On one hand, it acts as a hedge against inflation. On the other, its industrial demand is surging due to its critical role in renewable energy technologies like solar panels and electric vehicles. As the global push for green energy accelerates, silver is poised to deliver strong returns for investors who act early. Geopolitically, the landscape is also shifting dramatically. Tensions between major economies, particularly the US and China, are reshaping trade and investment flows. At the same time, alliances like BRICS are intensifying their efforts to reduce reliance on the US dollar, advocating for alternative financial systems and even hinting at gold-backed trade mechanisms. This push for de-dollarization could have far-reaching implications for global markets, potentially increasing the strategic importance of gold and silver in international trade. Closer to home, Western economies face mounting fiscal challenges. Government debt levels have reached historic highs, with the US alone surpassing $36 trillion in federal debt. Rising interest payments are consuming a growing share of national budgets, creating a vicious cycle of borrowing and inflation. For many governments, inflation appears to be the only way out, further eroding the purchasing power of fiat currencies and pushing more investors toward tangible assets like precious metals. As we move into 2025, the economic landscape will demand vigilance, adaptability, and a long-term perspective from investors. Staying diversified, prioritizing assets that preserve wealth, and keeping an eye on emerging trends in commodities and geopolitics will be critical. The global economy is at a pivotal moment, and informed decisions today could significantly shape financial outcomes tomorrow. Stay tuned as we continue to track the key forces shaping the future of the global economy.